Another record result for another big bag. Run us over ANZ's numbers out this morning.
ANZ coming out with a very healthy result, but slightly below market expectations. Its result came in at $2.97 billion, and consensus was for $3.1 billion, so slightly below expectations. We have a look at dividend expectations. Consensus was 68 cents. It's come in slightly below that at 66 cents. And of course, net interest margins, they were expected to decline. We were expecting to see a number of 2.39%. It's actually coming at 2.38%. So you can see how much it's slowed down from previous half years where we have seen a result in the previous financial year of 2.46% and 2.45%. So that slowed down to 2.38%. That was expected, but return on equity has been a bit stronger, from 15.7% rising up to 15.9%. But of course, this is reporting on the past results, and going forward, this is a bank which is focused on its super regional strategy, and it has seen some good results coming through from its Asia Pacific, Europe, America strategy, its APIA strategy. So altogether, a very solid result, but just slightly coming in below market expectations, and the stock off by 0.5%.
Up over 4%. Julia, Brambles issuing an update to the market. It seems that they like it. The market likes this update. What's your outlook on the stock?
We have seen Brambles' numbers for the first 9 months of its financial year, and Brambles is a stock, it's a cyclical stock which really benefits when you start to see an improvement in the global economy. The bulk of its earnings still comes from its CHEP business, and if we have a look at CHEP USA, well, we did see a considerable improvement in CHEP USA, so that was a huge positive. We have a look at sales revenue in the year to date so far for Brambles, up by 28%, but this has been driven by acquisitions, because if you have a look at the pro forma sales numbers, then it's only growth of 7%. So it's really been the acquisitions that it's made which has helped boost its revenue, so a positive there. And if we have a look at Brambles and what the market's watching next, well, we are expecting to see a divestment of its recall business. Now, that's expected in the next few weeks, and the market's going to be watching this one closely. Brambles is a stock that has underperformed in 2012. In the year to date, we've only seen the stock up by 1.3%. That's compared to the industrial sector, which is up by almost 13%. And the industrial space has really been driven by those mining services companies. We have seen companies like NWH, as well as Boat Longyear and the likes of Decmil, up around about 50% in the year to date. So Brambles, pretty lackluster performance in 2012, but a strong update coming through, and it's good to see the US CHEP business seeing an improvement there, and the shares up by more than 2%.
On this, what's the likelihood that we may see a potential stake sale on the Olympic Dam by BHP, given what we've seen from Woodside and its Brambles project just recently?
I guess in terms of Brambles, it's been good news for Woodside Petroleum, because it means that there's been a de-risking of that Brambles project coming up to the final investment decision. So it's been a positive for Woodside Petroleum. I think BHP is in a bit of a different position, where it is quite cashed up. It has the capacity to expand. And if we have a look at BHP shares, they performed well yesterday. They performed well overnight as well. The ADR's up by 1.6%. I guess one of the things, though, is the cost pressures here in Australia, the wage costs, and the cost of doing new projects such as Olympic Dam, because the number of new projects coming online by miners as well as oil and gas companies. So that's really putting some pressure and increasing costs here in Australia. So Olympic Dam being in South Australia, I guess the market's going to be watching that very closely. But of course, the flip side is it's been fantastic for those mining services companies, which have been real star performance in 2012.
And a third of a percent, extending on yesterday's rally to that 9-month high. How closely will you be watching those Dow futures throughout the session? Because that US market really seen as a key driver of our market today, I would believe.
I have a feeling that today's going to be a good day for the Australian market. The technical's certainly in favour. We're at the highest level that we've seen since August last year, and the US market overnight reaching the highest level that it's seen since December 2007, and that was helped along by the ISM, or the manufacturing numbers, coming out of the US. We have a look at the SPI futures, pointing to a gain of 0.5%, and I guess the good news is that we did see copper and oil prices trading higher, but the big, I guess the big thing that the market's going to be watching watching are the big four banks and whether they pass on that rate cut that we saw yesterday. So that's going to be a key for the Australian market. The more of that rate cut that's passed on, the better news it will be in terms of the consumer sectors. We saw the discretionary sector performing quite well yesterday. So I guess the big thing in the next 24 hours is going to be whether or not we see that rate cut being passed on in full and how much of that rate cut will be passed on. We also do see annual general meetings coming through for both Aristocrat Leisure and Woodside Petroleum. So watching for comments coming out of those two companies today, but all up, it should be a positive session.